conversation today focuses on Bitcoin and Ethereum, the pros, the cons, and which will dominate in the long term. Bitcoin is the first cryptocurrency invented by a faceless, pseudonymous creator. Its security, supported by a distributed, decentralized ledger running on over 80,000 nodes around the world, is deemed to be unhackable, the original, unstoppable honey badger. Its 21 million fixed supply ensures that as demand increases, the value of Bitcoin goes up. In its 12-year run, BTC has grown to a market capitalization of over $660 billion right now, making it the dominant cryptocurrency in the market. But its dominance over other cryptocurrencies has been shrinking from a high of over 70% in December to about 40% today. Whispers of a flippening are beginning to re-emerge. That is a hypothetical event in the future when a rising cryptocurrency's market cap, namely Ethereum, surpasses that of Bitcoin. Ethereum was conceived by Russian-Canadian Vitalik Buterin, a Bitcoiner who dreamt of a digital asset that could be more than digital cash, but digitize everything. An infinite machine, a universe computer for all if this then that transactions, or smart contracts. It has spawned whole industries ranging from decentralized finance to decentralized autonomous organizations to digital collectibles with the recent NFT craze. Ether is the second largest cryptocurrency by market cap at almost $300 billion. In May, Ether's record price rally triggered a flurry of activity in the options market, driving the cryptocurrency to flip Bitcoin in terms of trading volumes for the first time. ETH is up 240% year to date, while Bitcoin is up 20%. And with all that said, let's dig into today's topic. Joining me for today's discussion are Bruce Fenton, Managing Director of broker-dealer Watchdog Capital and CEO and founder of Chainstone Labs, a holding company for financial firms. After spending 2 decades on Wall Street as a stockbroker, Bruce walked away from his fiat job to take a leap of faith into Bitcoin. In 2015, he briefly led the Bitcoin Foundation, a nonprofit Bitcoin advocacy group, and created the Satoshi Roundtable, an invite-only annual gathering of Bitcoin OGs. And also joining us is David Hoffman, co-founder of Bankless, a content studio with a newsletter, podcast, and YouTube channel focused on education on how to live a life without banks. Welcome, David and Bruce, to the show.
Thank you.
Thank you.
Good to have you. And you both have contributed articles to CoinDesk. So thank you very much. All right. So Bruce, many assume you are a Bitcoin maximalist, a belief that there can only be one cryptocurrency, one coin to rule them all, as they say. But if I remember correctly, from one of your talks, you actually said you're protocol neutral and you created Raven Coin, so you can't be a maximalist. Where do you stand?
Well, I didn't really create it, but I'm a Bitcoin monetary maximalist. I think Bitcoin's the best money, but I definitely think that there are other digital assets that have value, and I like other protocols. A lot of people don't know that I'm a big Ethereum fan. I was in the Ethereum crowd sale. I'm happy with that investment, and I'm happy with Ethereum. And I think Ethereum has done a lot on one of the areas that I'm most interested in, which is security. Ethereum has the biggest lead for securities tokens. I think Bitcoin is my favorite chain. I'd like to see more of that kind of second layer building on Bitcoin, but I'm not somebody who believes in only one asset. I think that the world is more complex and nuanced than that.
And David, where do you stand? Are you protocol neutral? Are you open to the cryptocurrencies, or are you all about ETH and a one coiner, as they say?
I'm definitely not a one coiner, but I definitely do ascribe to what Bitcoiners also similarly ascribe to, which is kind of just a convergence on a handful of winners, not a single winner. The beautiful thing about Ethereum is that it's an expressive layer, and you can put many, many, many assets on top of Ethereum. And I think the ability to do that actually kind of sucks the wind out of the rest of the ecosystem. Kind of what we saw in 2017, which is to like produce a blockchain for everything, right? one of the whole points about Ethereum is that you don't need to build your own blockchain. You can just build on the Ethereum app layer. Or if you do want your own blockchain, you can just build on an Ethereum layer 2. And so a lot of these reasons to have, Litecoin, Dogecoin, like Cosmos, Polkadot, is like, well, you can actually just kind of use the Ethereum app layer and achieve the same properties that you want. And you don't actually have to worry about the really hard problem of crypto, which is blockchain security. That's what Ethereum and proof of stake takes care of for you. And so because it does that service for you, we can kind of see things as maybe a Pareto distribution, really just converging upon a handful of winners. And I do believe that Ethereum is going to be in that number one spot.
All right. Well, gentlemen, I'd like to divide our discussion between technology and investment. So let's start off with technology. So Bruce, let's kick things off with Bitcoin. What key technical features are unique to Bitcoin that make it a standout and differentiates itself from other cryptocurrencies out there?
One of the key things is the way that it was founded and the way it was created. You have kind of this immaculate conception, sort of. Nobody really knew. And Ethereum actually has a little bit of that as well, because Ethereum was a sort of one-time thing. When it was launched, it was very unusual. It didn't go on the market right away. It gets criticism sometimes for having what we would call an ICO, sort of, but it was a very, very different time. It was an experiment, and there was definitely not even any guarantee there would ever even be a chain, let alone a token, and let alone something that would trade on this. But the strength of Bitcoin is that its creation made it so that it was a very fair launch. That's very, very very difficult to duplicate. You had code given away for free, and the only people that knew about it were at first, a very, very small niche group of people, and then that grew, and that's given it a head start and a network effect that has, more importantly, caused a lot of people to work on the security of it. So I think it's a very, very, very secure chain, and there's a lot of eyes. There's over 800 contributors to the code, and there's thousands more that look at the code very, very carefully. It's probably the most looked at piece of code from a security standpoint. And most of the work on Bitcoin is all very security focused. That's sort of the number one thing that I hear when I'm talking to Bitcoin developers. That's the number one concern. So I think those are some of the things that I like about Bitcoin.
Mm-hmm. David, some of the things Bruce mentions: fair launch, more security. Perhaps comment on that and explain how Ethereum differentiates itself, or maybe improves upon itself in other ways.
Yeah, absolutely. And first and foremost, let me apologize for my background. I'm about to be moving apartments at the end of tomorrow, so it's a little bit hectic. There are some very similar commitments that Ethereum makes that Bitcoiners often talk about positively about Bitcoin, right? And that genesis event for Bitcoin is really, really important to the narrative, like this immaculate conception where we had this benevolent founder that stepped away from the protocol as soon as possible and kind of let it go. And that's really, really good for money. And I agree that that's a very, very compelling story. And you see a lot of those same properties, even though there's a certain cohort of Bitcoin maximalists that wouldn't agree with this, but there's a certain level of very similar properties about the way that the Ethereum blockchain first got started. The ICOs have been tainted, and there's a lot of negative talk about the Ethereum like pre-sale, which kind of illustrates that some people got into Ethereum before others, and that kind of disqualifies it as a money. But if you look at the data and just kind of look at the analysis, specifically the Gini coefficient, which is how Ether is distributed just amongst like an organic kind of scale of centralization to decentralization of the asset, after the presale, it was actually only a little bit more centralized as an asset distribution than Bitcoin. And even after since then, the Gini coefficient has only been improving in a more equitable distribution of the Ether. And the presale as a mechanism was a really great way to have instantaneous distribution amongst a very wide set of people. And it was a permissionless sale event. And so kind of just in the way that Bruce was saying, where, the code was given away for free and allowed to anyone to mine the blockchain and receive their Bitcoins, Ethereum had this bootstrapping event that put a ton of Ether into the hands of a lot of people at the very beginning. And then we've also had this like 6-year proof of work phase for even further Ether distribution. And that proof of work phase and that distribution phase is really, really nice when Ethereum moves to proof of stake. And all of a sudden we have this very distributed supply of who holds Ether as we turn into proof of stake. And the compelling thing about proof of stake is that, with Bitcoin mining, it converges upon, very central economies of scale. I cannot be a Bitcoin miner as an individual. I have to have a multi-million-dollar facility. Like, I won't be able to ever like participate in Bitcoin consensus validation because of the nature of proof of work. But with proof of stake, I'm going to run my own node inside of my own house and be part of the cohort of people that actually validates the blockchain. And as we relate that to what the future of money is, the future of money is participatory. It is something that everyone can touch. And a lot of that early fairness that Bitcoin maximalists really, really like to talk about Bitcoin, I actually see becoming more and more true by the nature of Ethereum and proof of stake, and also layer one scaling.